Thank you for joining us. This is Kathy Barzal with DiTomaso Real Estate, and today we're joined with Anthony Bonelli of Bonelli and Associates. Thank you for joining us, Anthony.
Thank you, Kathy, for having me.
Anthony has been my accountant for many, many years. He's a wealth of information. I'm always picking his brain. Anthony, tell us a little something about yourself, about your business.
Yeah, hi. I've been in business for about 14 years. And prior to that, I worked in the corporate finance arena. And that's where I learned a lot of my accounting and tax skills. And I've been using those skills when I talk to my clients, on a regular basis, just to help them get ready for what's to come with their business.
Awesome. And again, Anthony has helped me tremendously, and for that I'm very grateful. Today's tax tip that Anthony's bringing to us is really about like S Corp and LLC. There's a lot of people, whether they want to go into full-time business for themselves or do a part-time business. Anthony, how do they set it up? Should they be looking at LLC versus S Corps? Can you shed some light on that?
Sure. That's a good question. It's a very complicated question, so I'm going to try to keep it as simple as possible because there's a lot of nuances that go on in each one. But the main reason why you want to incorporate, whether it's an S Corp or LLC, is basically to protect your personal assets from your business assets. So as long as you do follow your rules and for your business, you shouldn't really have any issues. So getting incorporated, whichever one is ideal. The difference really between the two is how they're structured. So the LLC is a limited liability company, which basically means, for purposes of the IRS, if you're a single member or a multi-member, you're what they call a disregarded entity if you're a single member. And filing for an LLC is pretty straightforward. No additional tax forms to file, just your one Schedule C, and you make it as part of your regular tax return, and you file it as usual around April 15th. And the good thing about that is it's very easy to maintain. Keep your books, keep your records, have it enabled to your tax preparer, and you fill out that one extra form, and pretty much you're done. The bad thing about it is it's a little bit expensive, especially in New York, to set up. Right. The main reason why it's a little bit more expensive is because they require you to do what they call a publication. That's a 6-week printout in 2 papers, one daily, one weekly. But beyond, that's really the biggest downfall. That additional expense, they could run up to $1,400-$1,500 just to set up. But outside of that, it's a very straightforward process, and it gives you all the benefits of a corporation, protects your assets. The S Corp, on the other hand, is a little bit more administratively taxing, not to put a pun on it, but they require you to file a separate tax return outside of the regular tax returns, usually around March 15th. So you get, you still have your deductions, you still do all your bookkeeping and things like that, but you have to file one separate tax return outside of that, and then you do your normal tax return. Okay. So they're good in that sense. The benefits, one of the benefits I like about the S Corp is, one, they're cheaper to set up, and two, you can become an employee of your own company. So that means if you're used to getting a W-2, you set up an S Corp and you can get a W-2 from your own company. You get a paycheck and you pay yourself like you would anything. So from the standpoint of convenience and carrying out your normal course, S Corps are really good. So you really have to just talk to the person, your advisor, tax person, to get really guidance on what you're trying to do, what type of business you're trying to start. I know real estate businesses tend to go more towards LLCs, whereas general business, maybe S Corps could be good. But once you talk to the advisor, let them know what you're trying to accomplish, and they'll set you up with the right type of business structure for your business. But in either case, you can't go wrong. Just talk to a trusted advisor, talk to a lawyer to make sure you have all your documents set up. And that's, those are the main differences between the two.
Awesome, that's great. And I know, especially we shot a video recently on Gigsters, right, mm-hmm. where people getting side hustles. So if you have a side hustle, it's important to set it up correctly. So for those people that maybe they're not looking for full time, but if this is something doing part time, you still want to set your business up correctly, whether it's an LLC or S Corp or whatever it is. So, absolutely. Yeah. So, and if you haven't seen our other videos on these topics, go ahead and check out the YouTube channel. Anthony, thanks as always for coming in and for all these great tax tips. And again, if you haven't subscribed to my YouTube channel, please do so you can see other tax tips with Anthony Bonelli. His information is at the end of this video. Definitely highly recommend Anthony. Get in touch with him if you have any tax questions. And I know March 15th is coming up, so I got to get my my taxes in order. Thank you so much, Anthony, for joining us.
Thanks for having me.
And have a great day. This is Kathy Barzal with D. Tommaso Real Estate and Anthony Bonelli with Bonelli Associates.